second. And I think we should be live on Facebook. Hi everybody, welcome to today's video. I'm Sami Abasad, Director of Education at T3 Live. I want to first start off by saying Happy Mother's Day to all the wonderful mothers out there. It breaks my heart that I haven't seen my mom in such a long time now because of the COVID-19. But hopefully soon. So happy Mother's Day. And as always, we're going to go ahead and take a look at the market, go over some swing ideas for next week. If you find benefit in today's video, be sure to hit the like button. That would mean a lot to me. And then also check out the links in the description. I dropped a couple of links to some recent videos that I've done. You might find benefit in those, so check them out. First, as always, is standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure you agree to that before proceeding. But thank you for agreeing to that. But we're going to go ahead and turn on the charts and take a look at the market. And then, as I said, we're going to look at some swing ideas. First, let's talk for a minute about this incredible rally that we've seen in the market, right? Especially in the NASDAQ. Incredible rally that almost, you can almost, there's almost no justification for it given the economy is totally shut down. And the fact that nobody really knows what the outcome, when all said and done, what the economy is going to look like when stores. Let me talk to you for a minute here. When stores open up, are people going to go out there and shop like they used to? When the economy opens back up, is everybody going to go out there and shop like they used to? I don't think so. Why not? Because if you're worried about your job not being there in the future, losing your job, or if you're even just worried about the economy in general, would you go out there and splurge like maybe you did before the shutdown? I don't think so. So I think once the economy opens back up, we're gonna see the real impact of this shutdown, because we're gonna see a lot of consumers who make up, consumer spending makes up 70% of the GDP. 70%. And was even higher in 2019 because we didn't have any, we had that trade war with China. But 70% of GDP is made up of consumer spending. If consumers don't have confidence in their financial security, in their jobs, in the economy, they're not going to go out there and spend carelessly, perhaps, like they used to, which means there's going to be a lot of stores that open up, a lot of companies, and then shut right back down. If that ends up happening, we're going to see probably the market start to reflect more the reality on the ground than it has been the last couple of months. That's my prediction, but only time will tell. Now, why has the market rallied so much? There's so many different reasons. Of course, really, we get paid on price. We don't get paid to be Wall Street's best analysts. That doesn't matter. What matters is if the price is going up, you buy, you're going to make money. You're going to be rewarded for it. If price is going down, you go short, you're going to be rewarded for it, regardless of the reasons. So reasons, as far as trading is concerned, do not matter at all. So I just want to make sure we're on the same page. But what about what the Fed has done? What the federal government has done? What about the fact that the top 5 stocks in the NASDAQ, which are Microsoft, Apple, Amazon, Google, and Facebook, these 5 stocks make up 46% of the NASDAQ. The 46% of the NASDAQ 100, 44% of the entire NASDAQ composite. It's crazy. And these 5 stocks are all online companies. They're not as affected by a government shutdown, because virtually all of their sales, except for Apple, I would say, all of their sales are done online, not in stores. Does that make sense? So they're not even as affected. They make up 46%, 45.5% to be exact, of the QQQ. They make up 21% of the S&P 500. And these 5 companies haven't been affected very much at all. I mean, in the case of Amazon, it actually, the pandemic was good for it, right? It's hitting all-time highs. So these companies are not even affected, but were not affected by the shutdown, and they weigh heavily on the stock market. What about the fact that maybe the pandemic was overblown and a lot of the big money kind of knew that and went long? What about, I just read this morning that the first quarter of 2020, the retail brokers saw a record influx of new retail traders. Why? Because everybody's sitting at home. The ones that normally gamble in casinos, or the ones that don't even gamble, are now starting to trade and gamble. How do they do that? By trading the stock market. Most people, most novice traders, 99% of retail traders play only long. So, especially the new ones, I mean, they play only long. So that must have helped, right? The bearish sentiment, how about that? The bearish sentiment right now is about 53%, I think, which is pretty high. Normally it's only at 30%. When the majority is bearish, that helps to sustain the rally, okay? So there's been many reasons, and probably there's, the list keeps, we can keep going, but I've given you 5 different reasons, probably the Fed, the Congress, the Stimulus Act, the tech stocks making such a huge percentage of the market, basically, the bearish sentiment, the fact that the pandemic was probably overblown, the fact that I didn't even mention this, nowhere else to put your money. Bonds pay, the treasuries, the 10-year treasuries pay 0.5%. There's nowhere else to put your money, right? And then we said the bearish sentiment. So 6 different reasons, at least, why the market has had an incredible rally. But my point is 2 things. One, you get paid on price. So let's see, so you want to go with the trend, regardless of the reasons. You want to trade the what, not the why. Always remember that. And the other point that I want to make is, once the economy opens up, my prediction is it's not going to be as good as what the stock market is projecting right now. Okay? Probably not. Why? Because consumers are not going to have as much confidence in the economy, in their job security, to be frank. There's 30 million people that filed for unemployment. So those are 30 million jobs. Even though, let's say, more than half, maybe the majority, will get them back after the economy opens up, they're still going to be worried that they might lose their jobs. If they don't spend, that's 70% of the GDP. If they don't spend, those stores that opened up, they're going to shut right back down. If they shut down, there's going to be a loss of jobs, which starts that vicious cycle, right? So I think once the economy opens back up, the market will actually, even before, will probably react to it in a negative way, and we won't just keep going up and up and up. Okay, if I turn back on the charts, we've had 5 days in a row, up days now. We don't have any acceleration yet, I don't think, but if we have one more pop, that I would say should put a top to this short term, to this most recent rally that we've had. In fact, even if we'll see what the futures do when the futures market opens this evening, but even if we take out yesterday's low, Friday's low, that should signal a short-term reversal. But what I'm saying is, it's better if we didn't, it's better if we don't, and if we just went up one more day at least, and put in a nice big green bar, that should signal a short-term top. If we do that, okay, if we put in a nice solid green bar. But even if we don't, I think if we take out any of these bars, I mean Friday's low, that probably should signal short-term top. It'd be much better if we just went higher one more day, and it was a solid big green bar like this bar, like this bar, something like this. Of course, this bar would be phenomenal, but we're not going to get this kind of a bar, probably. But if we can put in one big green bar, that should probably signal a short-term top. It's a very exciting time to be a trader right now, in my opinion. We do have divergence between the Qs and the SPY and the IWM, but most recently they've been all trending up. The IWM, the SPY, the Qs. IWM went up 4% on Friday, so they've been trending up. It's just the weakness is very, very prominent, very noticeable in the IWM and the Dow Jones, of course, and then SPY. Nothing like the Qs. The Qs is almost at all-time highs, not quite, but almost. Qs is up on the year like 3% plus. So bias is bullish until proven otherwise. Until we take out prior bars low, and again for the third or fourth time, it'd be really good if we put in one big wide range bar. All right. So with that said, let's take a look at some of the swing ideas for next week, especially for Monday. I'll show you the bearish list first because we only have a few. Okay, MIT is not very good. I mean, MIT, if it breaks under Friday's low, would be bearish, but I don't think it's gonna do that. MIT was a nice play for us in the room, in the strategic day trader room on Friday. I called the breakout over 208, I believe. I don't really remember, tell you the truth. I believe it was 208 by 203, 206 over two. See that breakout? Stopped just under the base, and then target was 220, and it got right to target. Wow, exactly to target. How did I know 220? Because that's where the 20 MA was on the 15-minute chart. So right here. So you can remove the MIT off your list. It's not gonna. I don't like it that much. ADMA is already down 2 bars in a row. This is the MIT and the ADMA. Hold on just a second. I think I have the wrong list here, this is the scalp list that I'm going to be watching for Monday. Actually, those are the things that I'll be watching to potentially scalp. That's what this list is. Sorry about that. Here's the list actually. BCO looks pretty bearish under the lows here. See it? So I copied and pasted the wrong list, but here it is. This looks beautiful. Short under the lows, stop right here. Beautiful. IBKR, I've had it on the list for quite some time. It's not going, but if it breaks under 39.85 or so right here, it should be lower. It's a little spready and thin, but it should be lower. Stop right here and then target 34 bucks. Okay? So that's the IBKR. That's IB. Why do you think IB is not doing so well? Why do you think Interactive Brokers is not doing so well? Anybody know? Because Interactive Brokers hasn't been able to go to commission free, at least not on their flagship platform, which is the TWS, because they don't sell your trades order flow like the other retail brokerage firms do to high frequency trading firms on Wall Street. So that's why IB is the only one that has resisted that. I did read that they sell it to one high frequency trading firm, but it looks like that's the main reason why they haven't they've struggled, is because unlike E-Trade, Ameritrade, Schwab, Fidelity, TradeStation, all of these other brokers that went to zero commissions, IB is the one that doesn't sell, refuses to sell. But I did read one report that they sell it to one dark pool, I think, but I don't know. So that's the main reason. ONDK is a cannabis stock. Looks lower. It's not very good. BCO and IBK are far better. VMC looks good. It's a 1, 2, 3, 4. I just posted a video if you want to check it out about the 1, 2, 3, 1, 2, 3, 4 pattern. This is it. It's a weekly break. It's a weekly sell setup plus 1, 2, 3, 4. Okay, so it's a weekly sell setup plus a 1, 2, 3, 4 on the daily chart. So I do like the VMC a lot. And then WMC, if it can break under Thursday's low, which is 220, stop should be over 240 and target 137. Looks beautiful short. If it can break under 220. So it's a nice little list. It's not a long list, but it's not a, we have a bunch of good ideas, with the exception maybe of the ONDK. I mean, the ONDK is okay, but there's that support. Okay, and it's a 90 cents stock. So those 4 are solid ideas for shorts. Longs, I have a lot more. They're not as good, but there's a lot more to pick from. If you're in the strategic swing trader, feel free to log on to your account right now, and you'll see which 4 I myself will be playing on Monday. So feel free to log on to your T3 Live account if you're a subscriber to the Strategic Swing Trader newsletter, and you'll see which 4 I am playing. I'm playing 2 longs and 2 shorts. ADS is a daily buy setup. This had a nice transition A breakout, and then now has a daily buy setup. AKBA, a lot of the biotech and healthcare stocks have been really good, bullish, and so those are the only 2 sectors probably that haven't been affected so much by the pandemic. The healthcare sector and the tech sector, the healthcare and tech. So here long, stop under the base. AKBA is similar to the NTRA, very similar. This is a 1, 2, 3. The AKBA has a little bit of a base. So between the 2, I like the AKBA more, but these 2 are basically similar setups, very similar setups. AMC is similar to the ADS. It's a daily buy setup after successful transition A. Now the AMC looks better on the hourly chart than the ADS. So this is this looks better right here over the base. Stop just under it, and target 1 right here. Target 2 is up here. Okay, on the AMC. Next on the list is BNTX. This is a very, very interesting play. Unfortunately, I don't think I'll be playing it because it's too wild for me, but this is very, very interesting. It's starting to curl back up that rising 20 MA on the daily chart. So long over 58 bucks. No, not 58. Long over 50.50 right here. Stop would be right here, and target is 58 bucks. So this is an interesting one that I personally don't plan on playing because it's pretty wild. I try to stay away from the crazy stocks personally. But I know some of you like them. CAPR, CAPR, base breakout on the hourly, but also on the daily. Long, stop, target, and maybe target 1 right here. That's what I would do. Target 1, target 2. Okay. Next on the list is the CDEV. It's like the ADS and the AMC. It had a successful breakout, transition from a downtrend. See it? That's the downtrend. That's the base, the breakout, and then now the pullback. So ADS the same way, right? The downtrend, the base breakout, and the pullback. AMC the same, the downtrend, the base breakout, the pullback, right? And now the CDEV, which is oil, is the same. Okay. There's also a couple other oil stocks. No, maybe not on this list. CDNS is at all-time highs, and it's a breakout. Looks good. Looks definitely higher. Over the all-time high, stop just under Friday's low. Okay, on the CDNS. IFRX is a breakout over the base, stop under the red bar's low. GCI is a transition A. It's not quite ready, but I love the GCI long. I played it long one time. I mean, here, when it bottomed off the hourly chart, and now I like it over 118. The high here should be about 118. Stop 90 cents. Okay, target about $2. So I'm thinking, it should go up about 80% or so. Slightly more to target on the GCI. NTRA, we already talked about it. It's like the AKBA. OMC is a transition A. Beautiful hourly chart, actually, on the OMC. Transition A breakout, stop, and target. $62 right here. Notice the prices of the stocks that I play. I don't have any range. You know, that's a $50 stock. 40, 40, 11, 4. I don't have any specific range. What I care about is the price pattern. That's all I care about. GCI is not even it's just a $1 stock, 109. Right? So I don't care about the price of the stock. All that matters is the pattern, really. OMC is a $55 stock, has a transition A breakout. QFIN Notice how the base, I mean the trend is tightening up here. Broke out, tightening up. So I'm predicting we're gonna get another breakout here. The weekly isn't very good, and the monthly isn't perfect either. The entry for this would be over 871. It's not one of the 4 that I picked that I will be playing on Monday. RYAM is a transition A. It would have been far better to have played it right here. I wish I didn't. And now it has a 1, 2, 3 long with a target somewhere in this congestion area right here. Okay, but that's not one of the 4, but it does look higher. It really does. And work, I missed it. It's on my core watch list. I like it long as a long-term play, but I missed it on Thursday. So this is the day when I should have gotten in it. Didn't get it, and now it looks higher over this doji bar, but it's way up there already. Looks good on the weekly. It's breaking out on the weekly. Look at this. Looks good to the prior highs pretty much. So there's some decent ideas for you of all of these. There's about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, or 15 ideas. I am personally picking 2 longs and 2 shorts. So, all right. But thank you for sticking around till the end. I hope you enjoyed today's discussion. Remember what I said earlier. Reasons don't matter. As a trader, you shouldn't even worry about that too much. What matters is price action. If price is going up, you'll only get paid if you play long. If price is falling, you'll only get paid if you're shorting, if you're playing short. That's the only thing that matters. Of course, we care about the economy. It's fascinating to us because we're in the market. So it's nice to kind of let our minds wander a little bit and think about it. No problem. Nothing wrong with that. But don't let the reasons influence your short-term trading. Now, if you're a long-term investor, sure, absolutely, you should care about the fundamentals basically of companies, of the economy, or what you really think is going to happen. You should if you're a long-term investor. But if you're a short-term trader, if you're a day trader, a swing trader, you trade for a week or 2 at a time. I mean, your trade duration is, let's say, a week, or that doesn't matter. What matters is price action, purely price action. Okay? All right, guys. Thank you so much again for sticking around till the end. I hope you have a good rest of the weekend and have a wonderful trading week next week. I'm Sami Abasad, Director of Education at T3 Live. Good trading, everybody. Ciao. Take care.